What's up YouTube? Today I want to share 7 new dividend stocks that I never have talked about before. Every once in a while I use a stock screener to find potential hidden gems. And today I want to share all 7 with you. So without further ado, let's dive into it. Starting off with my favorite, Interparfums. This company operates in the fragrance business and produces and distributes a wide array of prestige fragrance and fragrance-related products, with some major licensed brands. The stock is around $125 and it is down 12% year to date. Interparfums is a 4 billion market cap company with a PE ratio of 26.7, so you pay a small premium for the stock. Revenue is at 1.42 billion, and in this graph we see that revenue really took off in the recent years. Another thing that I really like about this company is that the return on assets, return on equity, and most importantly the return on invested capital are reported at pretty high numbers. IPAR pays a juicy dividend of 2.3% that has been growing at a 22% growth rate in the past 5 years. During the lockdown periods, they cut the dividend, which ended their previous streak. For the price target, I'm using the Everythingmoney software, where I put in the 3 assumptions. We see that Interparfums is trading at a small premium, but still the company could be undervalued looking at the mid and high price target, focusing on the multiple earnings value. For now, I put them on the watch list and start doing a deep dive soon. Another interesting and potential favorite is Darden Restaurants, ticker symbol DRI. Darden Restaurants is the largest restaurant operator in the US, full service space, with a portfolio of 10 different restaurants. The stock is trading sideways year to date, with some ups and downs in between. DRI is a 20 billion market cap company with PE ratio at 19, indicating they could be an interesting value play here. Revenue is at 11.4 billion, and in this graph we see that revenue is going up in the long run. And of course, there were periods where this company was hit hard. Most recently, the lockdown periods, of course. Return on assets and return on equity look really good to me. The return on invested capital is also looking really good, and it is increasing over the years, which is really impressive for a restaurant company. Darden Restaurants pays a juicy 3.3% dividend yield, with a pretty nice 11% growth rate in the past 5 years. On top of that, they have increased the dividends for a really long time, but lockdown periods put a stop to that. For the price targets, I'm again using the Everythingmoney software. I put in the numbers and I hit analyze. For me, the mid to high price target is the most justified, so they are kinda in the middle of this range. For me, this means I need to do more research on the company. For now, I put them on the watch list. The next stock on the list is maybe unknown to most investors. Choice Hotels, ticker symbol CHH. Choice Hotels operates 633 rooms across 15 brands addressing the economy and mid-scale segments. Year to date, the stock is up 28%, which is really impressive. And CHH is a 7 billion market cap company, with a PE ratio at 27, again trading at a small premium. Revenue is reported at 1.5 billion, and in this graph we see that revenue went up in the long run, but not always steady and consistent. And of course, lockdown periods played a huge part in the recent revenue drop. But as of lately, the revenue is kind of flat. Return on assets looks really good at 10%. Return on equity looks really bad, but the return on invested capital is again looking really good at 22%. And CHH pays a tiny dividend, with dividend yield at 0.8%. Gross debts aren't that high either, but coming out of a really stressful period and payout ratio at a really low rate, this could be an interesting growth stock for the future. For the price targets, I'm again using the Everythingmoney software. I put in the 3 assumptions and I hit analyze. We see that this stock is still looking overvalued, so we definitely need to do more research, and in the meantime, I put them on my watch list. Another interesting restaurant company is Brinker International, ticker symbol EAT. Brinker International operates casual dining restaurants under the brands Chili Grill and Bar and Mañanos. Year to date, the stock is up 180%. And yes, you heard that right, 180%. This is a 5.4 billion market cap company, with PE ratio at 29, again trading at a premium. Revenue is reported at 4.5 billion, and in this graph we see that revenue is increasing at a nice and steady pace. Return on assets looks pretty good, and return on equity feels a bit like a fluke. Return on invested capital also looks really good, especially for a restaurant company. This company doesn't pay a dividend yet, but it used to do that historically. The lockdown periods put an end to that. For the price targets, I'm again using the Everythingmoney software. I put in my 3 assumptions and I hit analyze. And it is looking pretty interesting, with the mid and high price target. For now, I'm putting them on the list to analyze even further, because to me, it looks really interesting. Next up on the list we have Bol, ticker symbol BOL. Also maybe a bit unknown to the bigger public. Bol is the world's largest metal can manufacturer with a market share over 40% in its 3 main regions: North America, Europe and South America. This stock is up a shy 7% year to date. And Bol is a 18.5 billion market cap company, with PE ratio at only 4, which is crazy low of course. Revenue is reported at nearly 14 billion, and in this graph we see that revenue used to go up big time. But recently the company is struggling a bit. Both the return on assets and equity are looking really good, and return on invested capital is also looking pretty decent. Bol pays a shy dividend with a dividend yield at 1.3%, but the 5-year growth rate is looking really promising. For the price targets, I'm again using the Everythingmoney software. I put in my 3 assumptions and hit analyze. And we see some interesting numbers, with the high price target being in the green. At the beginning, I thought this was a really promising company, but it turns out to be a bit less interesting when I put everything together. Let's quickly move on to the next one, which is Installed Building Products, ticker symbol IBP. Installed Building Products is an insulation installer serving the residential and new constructional market. This stock is up 10% year to date, with lots of ups and downs. And IBP is a 5.6 billion market cap company, with PE ratio at 22, which is indicating they are trading around their fair valuation. Revenue is reported at 2.9 billion, and in this graph we see that revenue used to go up at a high level. But recently the company is struggling a little bit. Both the return on assets and equity are looking really good, and even more impressive, the return on invested capital is looking really good to me. IBP pays a small dividend, with dividend yield at 1.44%. But payout ratio is really low, so plenty of room to grow the dividends in the future. And they just started paying dividends, so that's why there is no growth rate yet. For the price targets, I'm again using the Everythingmoney software. I put in my 3 assumptions and hit analyze. The high price target indicates that this company could be undervalued, but the mid price target is showing slightly overvaluation. And for me, these 2 price targets are the most justified, so it's kinda in the middle of this range. Moving on to the last stock on the list, we got Allison Transmission, ticker symbol ALSN. Allison Transmission is the largest manufacturer of fully automated transmissions for commercial vehicles. The stock is up a whopping 100% year to date, which is really insane of course. And Allison is a 10 billion market cap company, with PE ratio at only 14, even after this year's increase. Revenue is at 3.2 billion, and in this graph we see that revenue goes up in the long run. But it has always been a bumpy ride. Return on assets and return on equity look both really good, and the return on invested capital is really impressive at 16%. Looking at the dividends, I also get really excited with a shy 0.85% dividend yield. But look at that growth rate of 10% and only a 10% payout ratio. So there's plenty of room to grow the dividends in the future. For the price targets, I'm again using the Everything Money software. I put in my three assumptions and hit analyze. Both the mid and high price target are showing that this stock is undervalued. So I definitely put it on my watch list and start doing a deep dive very soon. My final conclusion is that it is always nice to find new companies that are looking promising. I use this technique every now and then, where I quickly scan a really long list of stocks in a stock screener by using some filters that are important to me. Sometimes you end up finding a hidden gem, like I did with Texas Roadhouse a few years back. Usually I end up only buying one or two stocks, and so far that has been really paying off for me. Since with TXRH I'm up over 100% in terms of total returns. So in the coming periods I will do a deep dive on the most interesting stocks in this list and see if one of them is really a buy. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and it did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.